You are listening to ChartingWealth.com for Friday the 14th of July 2017. We see for the day stocks are up, both the S&P 500 as represented by SPY and QQQ, the NASDAQ 100. We see 20-year bonds are down. Gold is down. Let's jump right into these charts and see what's going on. We have what looks like it's probably going to end up being an up week. We will not know that till the close of the market on Friday. But as we look at our weekly chart, we had our first down week, really strong down week after the market topped. The market originally topped there on the 23rd, the week ending the 23rd of June. We had a weekly vertical crossover going down, and then the market for the preceding 2 weeks, the week ending the 30th of June and the 7th of July, started moving down. It was a slow move down because when the market crossed over, we still had the derivative oscillator positive. It was actually positive for 2 weeks while the price percent oscillator was going down. Remember, the price percent oscillator is the number one oscillator that we use. It's the number one indicator we use. Then we finally saw on the week ending the 7th of July, the derivative oscillator flip over, and what we've seen happen over the course of this past week is pretty much a flat trajectory. Our PPO, which had been heading down, has flattened out. It's the blue line on our charts. It's currently below the red signal line, as it should be if the market is in a down move. What we have currently is an open box spinning top, open green spinning top, which again means lots of indecision, but the market tending as far as price movement on the candlestick, and again we use Heiken Ashi candlesticks. If you've not listened to our training, you need to listen to that. It's some of the best training we've done. Heiken Ashi, you can find that at our website chartingwealth.com under training, HEIKEN-Ashi, ASHI. In Japanese, roughly translated, it means average pace. And what we see with the average pace, it's calculated different than your typical candlestick, which is high-low, open and close. This is calculated differently, but we find that it tracks price movement a whole lot more accurately, at least for the human eye to follow. But what we've seen is a spinning top means indecision. So the market topped out back on the week ending the 23rd, but it is still struggling to stay up. It is still, well, it's actually right where, still within the price bounds of where it was all the way back on the 23rd, even all the way back actually to the 9th of June. So again, this market does not want to go down. It's trying to hold its own, and we will continue to watch. Still confirmed down move on the weekly. As we take a look at the 2-day, what do we see happening? Very close to crossing over, going up. Has not crossed yet, but it has penetrated our weekly and our 2-day trend line. That happened a while back, 2 days back. But we do see first day of this latest 2-day candle has penetrated through our weekly trend line, significantly closed well above it. As we look at our 4-hour chart, what do we see? We see an incredible pull back, lots of upward momentum and movement. We'll continue to watch and see. Now, friends, if this peaks out and rotates back over, going down, without the 2-day chart crossing over going up, of course, that's a keen opportunity to jump back in for a down move. Hasn't happened yet. May happen, so keep an eye on the S&P for a potential down move. Of course, you do not want to be riding a down move at this point. Once we penetrate that weekly trend line, even if you don't have your 2-day chart crossed over, those are definite signals you need to get out and not let yourself get hammered. We even had that initially, warning bells go off when that 4-hour chart rotates over with as weak a topping as we had. So all the way back on the 10th is when the trigger should have been pulled, pulling yourself out of that. Wait for that 4-hour chart to cross back over, going down, and then you can ride it. Okay, let's keep moving through. That's where we are on the S&P 500. Next, the QQQ, which is the NASDAQ 100. Of course, it's in a confirmed down move. It is not as flat as and almost pending up as the S&P was as far as the price percent oscillator goes. Derivative oscillator still strong down, continuing to heat up, moving down, so still downward momentum on that derivative oscillator. We do have another spinning top, has a rather long wick on the top, which means, of course, the indecision the spinning top tells us tends to be in an upward trajectory. What's interesting is we don't have a close so far above the weekly trend line. So we'll continue to watch that as we go a little deeper into that 2-day chart. What do we see? It has not crossed over going up yet, but the 2-day chart has penetrated, of course, the 2-day trend line, did that all the way back on the 10th, but we also have seen it penetrate and close above the weekly trend line. Alarm bells, warning bells going off there. Initial warning bells, of course, when we penetrated that 2-day trend line. So again, you should have pulled the plug on that and not be riding that up move. If we do have a crossover going down, and of course, where should you have pulled that plug? That was on that 4-hour chart back in the afternoon on Friday when it crossed over going up, penetrating the 2-day trend line. When the 4-hour penetrates the 2-day, a lot of warning bells there. And don't forget, my friends, you can always easily, when the 4-hour chart crosses back over and you still have your 2-day and your weekly in the same direction, jump back in, ride that baby. So again, practice your virtual trades that way. And like we said, keep notes on every virtual trade you do. How do you do that? We have a trade worksheet. If you subscribe to the Daily Market Podcast for free, you do that by going and signing up at chartingwealth.com. We don't spam that list. We don't sell that list. That's our proprietary list, just with your email and your first name on it. We will send you, with every single podcast we record, the video. You'll also get the How to Read a Stock Chart video, the layout that we use, the latest updated versions at freestockcharts.com, how to sign up and plug all that in. You don't have to plug anything in. You just sign up for it and you download our layout. Takes one press of like 3 buttons and boom, you've got it. We also include the daily market worksheet, the weekly market worksheet, and that trade worksheet for you to fill out and keep up with all your trades. So, waiting to see what happens on the Qs. Will this up movement be strong enough to rotate the 2-day over and eventually the weekly? We don't know. If we do see a drop off, the market stalls out on Friday and moves down. Don't forget, we're in historically the worst time for the NASDAQ 100. So be poised and ready if it rotates back over going down on that 4-hour chart. Let's keep moving along. We're going back to the weekly and going to TLT, the 20-year bond fund. Of course, it is still in a confirmed up move going all the way back to the week ending the 3rd of February. Tracked sideways for a while, up a little bit to begin with, then down, then up, and has really been moving up except for a little pullback strongly all the way since late March. So again, we've had some nice movement and nice potential for profits in TLT. But of course, as we forewarned you, it did rotate over going down, and we go to that 2-day chart. Once we had that 2-day crossover going down, all bets were off, getting out, pulling the plug, taking your profit, watching this baby go down. It could be leveling out. We'll continue to watch. For the last few days, it's bottomed somewhere around 122.78. Remember, the weekly still in a confirmed uptrend. If this 2-day chart does bottom out and rotates over going up, it could give us a good signal for jumping in. The 4-hour chart did rotate back over going up, but without that 2-day chart, we have no trade. That's where we are on TLT. We'll go now lastly to gold. What do we see going on with gold? Well, it rotated over, going down back on the week ending the 30th of June. Of course, we've had 5 weeks now of downward movement on gold. Derivative oscillators continuing to move down strongly, as is the price percent oscillator. Down day for the day, just a little bit, 0.18%. Look at that 2-day chart. It's continuing to move down. However, the 2-day trend line's been broken. Looks like gold has tried to bottom out somewhere around about 115.41. Let's take a look at this 4-hour chart, see what we see. Again, 4-hour chart rotated. You know how strongly we feel about this 4-hour chart, how accurate it has been. It rotated back over going up. Always recommend pull the plug on a down move when that 4-hour chart rotates against you because it tends to be quite accurate. Now, if it is topping out and starts to roll back over going down, by all means look to jump back into a down move in gold. That is where we are, my friends, as we end the day on Thursday, go into Friday, the 14th of July, midpoint in July. Hope that you guys are doing well. You have questions, problems, concerns, you can get answers. Just write us CW at chartingwealth.com. That's C as in charting, W as in wealth, CW at chartingwealth.com. If you're not already signed up for and aren't already receiving our text notifications when we have these weekly vertical crossovers, the keys to what we do. Weekly vertical crossovers, we note those, send out a text message. Only happens about once, maybe twice a month. We don't waste your time otherwise. When that does occur, if you would like to receive them, you text the word Charting Wealth to the number 33222. So put into your phone 33222. That's where you're going to be sending the text. And the text you're going to send is one word, Charting Wealth. God bless you, my friends. Thanks so much. We love to hear from you. All the best from the whole team here at chartingwealth.com.